You know, the LLC is most common form of new business that we're seeing in recent years in the United States. Although the S corporation is still popular, we're seeing a lot of LLCs. Let's start. What does an LLC stand for? An LLC is actually a limited liability company. It's not a corporation. It's a limited liability company. Let's go through our 10 factors so that you have a basic understanding of what an LLC is and how it operates. An LLC is a formal entity. That means that you generally must have an attorney and an accountant involved to get this thing formed. Please don't set it up yourself. These are hard to start, they're hard to stop. You have to have formal organization documents with the Secretary of State to get them started. So number one, they are hard to start and stop, and they are formal documents, have to be filed. Number two, you don't have the overhead problems that you have in a corporation. There is no requirement for annual meetings. There is no requirement for annual reports or boards of directors or anything else. So although they're hard to start and stop, you don't have quite the formality requirement that you have in the corporate form of business. As you can see, that's actually an advantage. Number three, just like every business, you've got to have a separate checking account in the name of the LLC and a separate set of books and records to keep track of what's going on. And you know, forget the IRS, you need this from a business management point of view. Without good records, folks, 30 years of practice tells me you're going to fail. You've got to have good record keeping because I've seen it happen so many times in 30 years of dealing with small businesses. Number four, you've got to have a federal identification number. Now, your accountant will be able to get that for you. It's a minor formality, but they'll be able to get that for you. Number five, very, very low liability. An LLC is similar to a corporation here in that if the LLC gets sued, your liability is limited to the money that you've invested. Similarly, it's a little bit easier to raise additional money in an LLC than it is maybe in a sole proprietorship. But it's not as easy as it is to raise money in an S corporation or a C corporation. So number five, you have very low liability, but it is a little harder to raise cash than in the corporate form. Number six, income taxes. There are none. An LLC does not pay tax. The LLC will fill out an information tax return every year, and then whatever profit is shown on that return will flow through to the owners. The owners, by the way, are called members, and the members will pay tax on their share of income. So we only have one level of tax. There's no double taxation like you have in a C corporation. All right, number seven, fringe benefits. You know, the LLC is not a very good entity when you have to pay maybe health insurance costs for the owners of the business. In fact, I like to say it's a little bit better than a sole proprietor, but it's nowhere near as good as an S corporation or a C corporation. Keep that factor in your mind when you're trying to decide what you want to be, because the LLC has that distinct disadvantage of it's not the best entity for fringe benefits. Point number 8 out of our 10 points. This one I like. If the LLC loses money, you get to deduct your share of that loss up to not only the money you've invested, but also your share of any debt the LLC has. Meaning you can actually deduct more than what you've invested in the LLC if it happens to lose money. Now let's hope that situation never comes up. You know, we don't want to have losses, but good, rest easy knowing that you can deduct those losses if they get incurred. Number 9, a disadvantage. The money that comes out of an LLC is not a paycheck. It's called a guaranteed payment. Now, what this means is if you receive a guaranteed payment, you have to pay all your taxes yourself quarterly throughout the year. There is no federal withholding. There's nothing going on. The LLC deducts what they pay you, and you're responsible for all the tax, including your share of Social Security and Medicare. I would call that a disadvantage of the LLC form. And finally, number 10, the other advantage of the LLC, you know, you have the ability in an LLC to make unequal distributions. What do I mean? Well, let's compare here. Let's say I have an S corporation with 4 equal shareholders who own 25%, and I have an LLC with 4 equal members who each own 25%. In an S corporation, if I'm paying out profits in the form of dividends, I have to pay those profits equally to each of the 4 owners. 25% of the profit has to be distributed to each shareholder equally. In an LLC, even though they own 4 people own 25% apiece, you can distribute profits in any manner that you wish within certain IRS boundaries. So we have 10 characteristics of the LLC. An LLC is actually a limited liability company that is hard to start and hard to stop, does not have the formality of the corporate form of doing business, does have to have separate checking and records, does have to have a federal identification number, has very low liability and an average ability to raise additional cash. It has no taxes because all the income flows through to the owners. It's not great for fringe benefits. It's not the worst, but it's not great. Number 8, you are allowed to deduct your losses up to the amount of your investment plus your share of borrowed money. Number 9, you take your money out as a guaranteed payment so that you have to pay your own taxes on that on a quarterly basis. And number 10, you have the ability to take out profits in a manner other than your ownership percentage. For further information, please feel free, visit us at our website or call us at the number on the screen. Bob Jennings, thanking you again for listening.